it's obvious to me that blockchain will be an asset class, and everybody's going to have a blockchain team, blockchain allocation, and I think it's going to be some number like 800 basis points or something, some number like that. And all the institutions that we have invested with us or with our competitors in the space, they have maybe 50 basis points or at most maybe 2% of their assets in blockchain. So my kind of construct is we've done a lot of work evangelizing for our space over the last 10 years, and we've gotten some institutions, but not even all, to go from 0 to 1. We got a no to become a yes, but it's still very, very small. And the trade for me is over the next 10 years, it's going to go from 40 basis points to 800 basis points, and that's just a lot of buying to happen.
Despite the ongoing decline in crypto asset prices, experts are certain that institutional investors, including giant financial corporations, family offices, and sovereign wealth funds, are still very interested in investing in the space. Earlier in the month, State Street, a leading investment management firm, revealed that institutional demand for cryptocurrency is not waning despite the market sell-offs. State Street Digital's product lead for the Asia-Pacific region, Irfan Ahmad, said the firm's institutional clients are still keen on crypto assets and blockchain technology. During an interview, Ahmad said, "During the course of the June-July period where things were really hotting up in terms of activity, we saw institutional clients not necessarily double down, but they weren't really deterred from placing strategic bets on the asset class itself. The takeaway from that is, I think there is a belief that the asset class is here to stay," the executive added. Last week, financial giants Charles Schwab and Fidelity announced the launch of a new cryptocurrency exchange. According to the announcement, the first-of-its-kind exchange, EDX Markets, will offer investors safer, faster, and more efficient cryptocurrency trading. A day before that announcement, Wall Street Journal also noted that Fidelity was mulling over offering Bitcoin to its over 34 million retail investors. Though the Boston-based financial giant has not confirmed or denied the reports, Galaxy Digital CEO Mike Novogratz hinted at something similar while speaking at a crypto conference last week. Novogratz said, "A little bird in my ear told me Fidelity is going to shift its retail customers into crypto soon enough. I hope the bird is right." But that's not all. On Tuesday, Nasdaq also announced the launch of Nasdaq Digital Assets, adding that there has been increased demand for digital assets among institutional investors in recent years. At the initial phase, the new crypto unit will offer custody solutions for Bitcoin and Ether to institutional investors. These announcements from leading financial corporations and the world's second-largest stock exchange prove that everyone is scrambling to get a sizable share of the crypto market. In a recent broadcast, Real Vision CEO Raoul and Dan Morehead, the founder and CEO of Pantera Capital, discussed the influx of institutional investors in the crypto space. They also discuss how this trend will impact the space in the coming years. Please watch, share, and like this video as we bring you this important update on institutional investors. Also, ensure you drop your comments and observations in the comments section. Subscribe to the channel and turn on post notifications for more videos like this. Thanks and enjoy the video.
Talk to me about the institutions and that adoption curve. The first people in the space were the family offices and the high net worths. Then you're starting to see more and more institutions come in. What's the journey there, and how far are we with that?
There again, I think we're just at the tip of an iceberg. And it's an iceberg this industry's been talking about for 10 years. So, all credit to the fact it's been predicted for a long time. But it is actually starting to happen now. There's big public pension plans that are very public about how they're investing in blockchain. Most of the major endowments have blockchain investments now. And the way I think about it is, you and I used to trade together in the 90s, and we've been through commodities becoming an asset class, emerging markets becoming an asset class. It's obvious to me that blockchain will be an asset class, and everybody's going to have a blockchain team, blockchain allocation, and I think it's going to be some number like 800 basis points or something, some number like that.
My view is there's that, which is the buying side, and then there's the retail adoption side as we build out use cases for the masses. And those two things, is how you get to the 3 billion number. And I don't know, my guess is it will end up being a $200 trillion asset class, which is in line with the size of other asset classes. And the adoption is fast.
Yeah, it's happening. There's a lot of good use cases, like especially cross-border remittance. That's such an easy one to get your head around. The average fee is 8% for remittance, and for us in finance, that's just a number, but like for the migrant, it's a month's wages that they're paying their remittance company. And so you already have 10% of all US to Mexico remittance going over Bitcoin. That's great news. It doesn't sell newspapers, so they don't publish stuff like that because they like to publish bad stuff. And there's 2 million people using Bitso now. So there's a lot of traction, bubbling up. But again, we're going to billions in the next 10 years. Yeah, so we've been very focused on DeFi the last few years. It's building a parallel financial system. Gaming's coming online now. We have a couple 100 million people using blockchains. So there's a lot of really cool gaming projects. There still are a lot of opportunities in the scalability sector. We're invested in things like Arbitrum and Starkware that are helping, the main blockchains pump a lot more volume through. And then there's space for other layer ones like Near that, allow for, much higher throughput. And so there still is dozens of different use cases that we're focused on.
What happens to these layer 2s when ETH starts sharding? Because that's something I'm trying to work out in my own head. Is that a killer, or do they just coexist? How does that all work?
Well, I think we are going to need, all these scalability solutions. Most of them are multiplicative, so that if you're scaling the layer 1 and scaling multiple ways on the layer 2, it adds to scaling in a multiplicative way. And I think the main thing we got to remember is, Bitcoin and Ethereum are doing 10 transactions per second now. Visa does 15,000 over Christmas. And if we're really right, that everybody with a smartphone is going to be doing gaming, NFTs, all these things, we have to get to hundreds of thousands or millions of transactions per second. So all those are additive, and I think they'll all be used.
What we're all hoping and waiting for is the macro environment to stop picking up in a way that gives us a tailwind. Right now, it feels like we're at the point where the macro environments stop being worse for digital assets. What does that look like? What are we waiting for to start to see that nice tailwind that knocks in and brings that exponential trend back again?
Yeah, I'm actually rooting much more for people to focus on the fundamentals of blockchain, all the metrics, than I am for some kind of miracle to come washing back from the macro markets. We had a 42-year bull market in bonds and equities, so it might be longer than people hope.
Because your secret suspicion is that you think the bond market, the yields have now turned, the secular cycle's changed, right? That's your hunch.
Yeah, I think we just kind of collectively have a failure of imagination on how high yields have to go. Everyone's saying, oh, the Fed's going to cut 100 basis points next year. They might, and that'd be great, but I wouldn't bank. We're not banking our strategy on that.
No, and if you play that through, that maybe rates go higher, which is the opposite view of you, but if it does go higher, it breaks the financial system, which is an accelerant for the adoption of this parallel financial system, right? Because we've got so much leverage that there's very few ways out. You either print your way out of it, inflate your way out of it, or break the entire system. And that's why I think we've all been super interested in this parallel system, right?
Well, I do agree with you that I'm not sure how the traditional systems are going to get out of the box they're painted into. And that's why I think alternative asset classes, like maybe gold or blockchain, or even other commodities, are going to become much more popular while the markets try and figure out what do you do in a rising rate environment and what do you do, with a ton of uncertainty out there. Investing in something that historically has had very low correlation with risk assets, and I think going forward will regain a very low correlation.
As Powell and Morehead have explained, a massive influx of institutional investors into the crypto market will boost the overall market cap exponentially. If it continues to go as fast within the next decade, we could be looking at a market cap of $100 or $200 trillion. What do you think about Powell and Morehead's interview? Please drop your comments and observations in the comments section. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other crypto-related videos to stay updated on market trends. Thanks for watching.